Well, hello folks, I'm L.A. Little and this is your daily NeoTA Wrap. We take a look at these markets and we do it from a neoclassical perspective each time, asking ourselves just one question: what happened today and what does it tell us about the coming days? Do the show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube and available there under the channel L.A. Little. If you want to check it out, subscribe up on the right hand corner. Anytime content is pushed, you are notified, which is a nice little feature they have. If we move to the markets, last night we were talking about ideal that this market more than likely going to try to bounce from this area, and it tried all day long. Still too heavy in the NDX. That was kind of the culprit all day, couldn't get moving. The small caps actually did go up today, and I think that number is right. They've been lying to me for a long time in terms of the ending number on this, but I know it was up. I don't know if it's 0.6. We'll see here in a second. But elsewhere is flat, right? Dow, S&Ps really didn't move anywhere. NASDAQ didn't move anywhere. What moved was the NDX, and why was that? Well, it was Apple. We talked about Apple. As Apple goes, so goes the market, and certainly so goes the NDX, because it's such a huge weighting inside the NDX. Elsewhere outside of that, really wasn't a lot happening. Gold was down again, but the gold stocks actually started to move the other way. I told you that they would not too long ago. Let's pop in here, right here, 2 days back. I was saying, hey, they're getting ready for a nice counter trend bounce. We played those today, made some nice money on them. I'll show you what we did there in a bit. As far as elsewhere, silver, not much. Bonds were up again today, which is kind of interesting. They're pushing up into an area where they're either going to fail or they're going to head right back up again. The long-term trend is up on the bonds, not down, so you have to be careful if you're playing with that. Dollar up again, another percent. This is becoming a real problem, and we'll tackle that here in a second. Let's move to the charts, see what we got. Okay, so we'll start here with the S&P 500 as we usually do. And what we see is further push, just a little bit more push here to the downside today. Really couldn't get anything going. Looking at the volumes, volumes didn't expand, but it did close at a lower low. That says this thing can try to go lower. We do have just a big A structure in place. I'm looking to see if there's an ABC, and there's not. So far it's just straight down, right? There's no up or down. It's just down, and there's nothing here to tell us anything other than the fact that, hey, it's a new low. It can go lower. I'm going to move to the NDX because the NDX is the one that we were talking about last night as the one we really wanted to watch, and that was because it was coming back in to do a retest regen bullish off that prior swing point high. That area, you've actually got a nice big bar here that figures in the equation as well, but that area is the first time back after more than 6 bars, and when you travel more than 6 bars after a breakout, as we got here, that typically says you're going to bounce, right? Odds are pretty high that you're going to flip around, you're going to bounce. That didn't happen. At least it hasn't happened so far. Now, it hasn't violated it, but usually as you come back to this, right, usually after 6 bars, that will just simply come into the top of this area and bounce straight out of there, and that is not what happened today. So that's a slight negative, but you still have the setup here for the reversal off of that retest regenerate. Now, if this thing really gets ugly, we may see it come all the way back on the NASDAQ. And the NASDAQ, to get back to there, that top is 48.15. We're trading at 48.50 roughly, so 35 points down. 35 points down would bring you right into the top of this. That would actually pull the NDX below. And so what you would expect, if that's the case, right, this would come into that. The NDX would go even lower. They would both flip around and come back out. That would be kind of the ultimate washout, if you will, if that's the way it sets up. So Last night it was set up to come down, get in there, do the test on the index, and try to pop back out. It tried all day long, but it failed, and it did not get out of there. So all we have at this point is an indication that this market's going to try to trade lower. The only one that's not telling us that is the Russell. And the Russell actually went under yesterday's low, 1206.32, got to 1206.11, so you went up underneath it, back over it, and you close higher, and I believe just inside this bar, 1216.22, just underneath it. Got into it and it fell back at the end. So it did go under, back over, less volume. And remember, it's also doing a bullish retest, regenerate itself. This is a second trip back, and so far that is holding. And we talked about it last night. It was right at the bottom. More than likely this one was going to be a better performer, and that's exactly what we saw today. So Russell's saying, hey, this thing's going to try to bounce. NDX still can. Composite still has farther to go. The SPX is in the weeds, doesn't know what it's doing. That's where the indexes are. If we take a break here and then come back, we'll look at the sectors and see if there's any indication there of what's happening next.
Learn how to trade with the Trade with LA service provided to you by TA Today. This service includes daily portfolio and comments that are emailed to you before the market opens each morning. We provide a daily view of the markets and a model portfolio you can follow even if you work another job. Every weekend, LA records his weekend broadcasts that gives you a synopsis of the week and a prognosis of coming weeks. You will also have access to our Teach and Trade room, where LA provides day trades and teaches neoclassical concepts throughout the trading day. To get started, go to our homepage and click Trade with LA.
Okay, as we come back here, looking at these sectors, there really isn't much here to tell us this market's going higher. Looking at the strongest ones first, IBB, the technology, right, hanging at the highs again. Did this before in a consolidation, then spiked higher, faded back in, and this would actually be running if the market was allowing it to, but the market's just not doing anything. If I look at the ITB, which is the home construction, gets a bounce today, a little bit more volume, but that's not really looking like it's going much of anywhere. IYT was up the most today, but yet that's just a weak bounce inside a big downtrend, to cover a gap. So, no volume expansion or anything like that. Looking at the SOX was strong all morning, but it was an inside day and it couldn't go anywhere. There was no volume on it. And if I go to even the weaker ones like the XLB, still fading back in, going to get back to the retest regen zone. If I look at the XLE, this one actually did an under-over with less volume, which says it's going to try to bounce now. Financials, we had the details come out after the bell with respect to the Fed's stress test, and this was an inside day. Less volume inside day doesn't tell me anything. And if I just keep going down the list, there's nothing in any of these that tell me anything. What tells me something is really over in the ox markets, and that is with the currency. The currency is what's moving stuff. FXE falling off the cliff. And if you go back and look, I did an article way back, I think it was like early November, on the FXE. And in early November, I'm going to pull the weekly over. Early November would have been like right here, right? We were trading at 123, it looks like. Since then, we've gone to 103. We've taken a 20% haircut since I wrote that. And when I wrote that, I said that we were going to par most likely. And I gave the conditions, the setup and everything, and said it'd probably go to par. Well, if you look at this, this has been a straight decline, and when I view it, right, all I can see is starting at this high, that's 124, down to here is 110. That's 14. The bounce was weak. That takes you to par. And it takes you to about 99.50 roughly. That's another $4. this thing has been totally torn apart. And the flip side of that, of course, is the dollar. And as the dollar goes up, that puts more pressure on the various corporations that are multinationals. And so when we look at the large S&P stocks, when we look at those, like Johnson & Johnson, just go down the list, 3M, all of them, right? They do large business overseas. They're the ones that are getting hit. And if we look at this, I don't see where it's going to stop. I mean, let's pull the weekly over on this one and do a weekly on it, right? Let's do the ABC. Let's find it. Man, it's from here. So that low was 22.45. We go into 25.20. That's 280 roughly. 280 off of this gets you to 40. Excuse me, to 280's 26, 27.40, and we're at 26.40. Another buck. So you can see, that's 5% more. You can see that if this dollar keeps going higher, that's going to keep putting pressure on this market. I wouldn't be surprised after this kind of a gap run that you get some sort of consolidation, which will allow the market to do its bounce, but then it's probably going to get pressured again. But the bounce is setting up. It's just where's it going to come from and how big is it going to be? And this thing has to stop. It has to stop going up, right? And go sideways at least. And so that's the big thing. The other one is bonds. Bonds are still trying to trade up. Bonds are coming back into this swing point lows bar. It had decent volume on it. That top 127.93. This low over here is way up there at 130. This kind of seems to be on the way up. This seems to be the key area. If it gets over this, it's probably going to seek that swing point high, which is back into this bar. So bonds, big spike down, and now rallying back the other way. And this is that there are no, to some extent it's a fear trade, right, that you run into the bond. But the other part of it is there's probably demand from overseas that they can't get a yield anywhere else. And so they come into here. And remember, the long-term trend on the bonds is up, not down. This so far is a counter trend bounce, a counter trend pullback on a longer-term uptrend in the bonds. And if it gets much higher here, it's probably in danger of going back towards the highs. So bonds are something else to certainly keep your eyes on. And in that gold market was an interesting market today. We also got some trades off in that. And before we pop to that, we'll take some viewer questions because there was a couple trades we had today. One of them was gold. The other had to do with the Russell. So let's take the viewer questions next. Okay, as we come back here to look at the viewer questions, there was a question today, and it actually wasn't so much of a question as much as a comment, but there was some confusion, maybe is a strong word, but there was, maybe question's the right word, about how we set this trade up today and what we were looking at. And I've got it on 2 days here, and I'm on the Russell 2000. We were trading the TNA, which is the 3-to-1 long, and we were doing that inside the trading room. We call it the TNT room, teach and trade. And one of the members, I and one of the members was trading it, or actually a couple of the members were trading it I know of. And one of them wrote back and said, and I'll just read it. I took the TNA trade today, but I missed the ABCD up that one of the members was talking about, which seemed to turn out to be very accurate. Was he using the Russell? I was using the IWM and I tried to do the ABC, but it's off, right? It's not right. I must review your rules for the ABCD and the the videos. I have a video library that they can go to, members can go to, and he wants to review that. He says, truthfully, I thought it was going to 121.50, and I'll pop up the IWM here as well real quick and just show you that. So the IWM thought it was going to 21.50. We got up to about 21.10, and he had to scramble to get out of this and pocket his money. Let's go back to the Russell. when you're trading a derivative, you really want to trade off the index itself. And so that's one of the first rules. So, when you're looking at the IWM or you're trading the TNA, you don't want to look at the TNA chart. You want to look at the IWM chart, or you want to look at, or actually you really want to look at the Russell chart, because that's the chart, the cash index that's moving, and that's the one that's showing you what's happening. I've got it up on a 2-day here, and you can see in here that you've kind of got a range here, right, and another range that was about to there, right, and then the breakout range, took it higher. Now I was trying to range trade this big range, and I was looking for about 2140 myself. One of the members came up and said, hey, there's an ABCD structure that's forming, and that ABCD structure was from here to there. That's the A part, right? And it already, it set up multiple times today. It got down to here, got up to there, right? And just a little bit shy, I believe, on that one. And then it set up the other way, right? And it more than fulfilled that one down. So you had this nice little stuff going on here. And then this one was setting up right at the end of the day, and this is the one we were talking about. And the trade was, to get into this thing and expect this to trade up to its target. And if you take those numbers, and although I do percentages, when you're doing it your day, you can just arithmetically do it. That low was 1206. This high was 1211. So you really had, it's 1206.11. And that was 1211.60. So that's 550, right? And then 550 onto the low would get you 1570. Got the 1216.50 actually. So it overran it a little bit. But you can see that structure set up, provided the measured move, got its run, and then it's it's sold back off. And if you didn't take your profits up in here somewhere, you gave a big chunk of it back. And it's just the way it is. Of course, it gave you some back here at the end, but most people aren't going to stay for that last bar. I've got it on 10-minute charts. That was the structure, and that was what we were watching. That's how you count it, and that's how I counted, and I believe that's what the other member was doing. So that's what that trade was. The other trade we were making was an interesting trade that I brought up, and I want to show you that one as well real quick. And there's all kinds of trades. You're not going to get, every day you're not going to get the same trade. And one of the key things to being successful in the market is to picking up on trades, what's hot that day or what's going to move that day if you're intraday trading, and then being able to set up the trades. And there's different ways to do that, to pick up on that. And I had mentioned at the top of the show about gold, and actually the gold stocks versus gold itself. And this black line, this is just a relationship between the two instruments on a 1-day chart. I'm on a 1-day chart here. So this is intervals 1 minute to 1 days. If I just look at the gold stocks, they were trading up underneath. Here's gold just kind of meandering along here and can't get going, and gold was down all day long. But the gold stocks trade, I actually mentioned it right here this morning. I said, this is not a bad place to be looking at these gold stocks. I actually bought into it, and then I told members I sold out because it doesn't look like it's going to hold here, and I'm going to wait. And the better trade I was pointing out to them was a break of this little range. That was going to be the better trade. And so what you wanted to do was allow it to get that break, right, and to get that move. And so what we did is, one of the members actually bought it down here and wrote it up and got out somewhere up here and then got out the rest up here, I think. Myself was to buy it, sell some, buy it, and do it again. If I take this now and move this over so you can actually see the chart on it, you can see, not a comparison, but the chart itself. And I'll just use the GDX. We were trading Nugget, which is a 3-to-1. The trade on this, if I bring it into, well, actually this is a good spot to look at it. I'm going to put it on a 5-minute chart, and I'm going to pull it in tighter. And the trade I was talking about initially was, as the morning starts here, you had these bars from yesterday, and then as this thing began to set up, that trade was right here as it broke out. And so you had to grab that trade as it broke out, and I'd laid out 3 targets. I said the first one would be, well, I was laying out the targets on the expansion in not the GDX, but the 3-to-1, the nugget. And when I had set the targets were, they were here, they were up here, and they were all the way up there. And it hit every one of them. I'm pretty sure it did. I can pull that chart up in a second and see. But, instead of staying in it back here when I was originally in it, which was right here, I got out, waited, let this trade set up, made the spike, got out of some of it, came back down, ended up, when it started to take back off, bought back in again and then rode it up. And got this target and then finally sold out at the top. And if I go to the 3-to-1, we're talking, 3% in this index. If you go to the 3-to-1, the nugget itself, that thing moved almost 10% today. And from the bottom trade where that gentleman got in today, one of the traders, it was even more. But the targets I was talking about was $9.50, $9, which it hit here. Actually, I talked about 2 targets, 9 and 9.50. Those were the 2 targets today. And it spiked to the first one, came back, gave you another entry, spiked to the next one. It was perfect trade setup. And, and it gave you multiple places to get in, right? You could have did like or you could have waited until this broke here. And on the way back up, you could have bought the retrace back into this zone, or if you wanted to be safer, you could have waited on this breakout here and rode it again. High probability trades, nice setups, wide percentage gains, big gains you can pick up on a day trade like that. It's big money. That's it for that. Let's pop in and do the final thoughts. Well, it wouldn't be appropriate to leave tonight without coming back to the NDX and talking about this retest regen zone that it's in. Right? Probabilities are very high that this should hold. Should hold. Right? Everything is about what should happen. Right? And then we use what does happen as our indication to either confirm our beliefs or to adjust them. That should hold. A big part of whether that holds or not really has to do with Apple. If we bring Apple in here and look at Apple, right, because Apple's such a large weighting. Apple was down to, what was it, 1.5% today, 2% yesterday. So you lost 3.5% in 2 days. Apple's coming back in and has an ABCD structure, to bring it down to, from this level back up and back down, right? And that's going to bring it right into this zone here. Now the real support is down in this area, but I don't think it's going to get there. I think this area is probably going to support it if it wants to get that far. Volume's tailing off, right? Apple's going to get bought here at some point. It's just a question of where. Is it going to be down here or is it going to be farther up? If it's down here, that NDX is going to get up underneath, and we're going to have to get a reversal to actually save that trade, in that bullish retest regen zone for it to actually hold. Now, we also have on a weekly basis, and because we're about middle of the week tomorrow, on a weekly basis we're coming back in and doing the retest regen on this high as well. Should this hold? Should that daily chart hold? Yeah, they both should hold. This one is the lesser probability. The daily chart has the higher probability. But as I pointed out before, we actually have one other possibility, and that is that this one, and that's the NASDAQ composite, the broad composite, wants to come all the way back down and do that as well. My thought coming into all this, and why I suggested last night is we'd probably get the bounce, is that it seemed more likely that the NDX would give us the first bounce. That first bounce would bring us back again after it's sold, and then we get the test here that would hold. That still may end up being the case, but it could work out differently, and it would be a weaker bull market, in my opinion, if it went this route first. In other words, if this comes all the way back in, the index undercuts, and especially if the index stays under that retest regen zone, that would make it a lot weaker, in my opinion. So I'm still looking for this market, even though we don't have any reversal yet. I'm looking at the projections and the probabilities on bullish retest regen zones to give us the read, along with the Russell, that more than likely we're going to see this market try to push its way back up again and get some sort of bounce going. And I'll leave you with that. As always, I thank you for being there. Tell a friend, tell two. I'm LA. This is and it was your daily NeoTA Wrap. Have a great night. I'll see you next time.